Hey everybody, hey, happy Sunday, happy Sunday. So as usual, before we kind of start this chat, I like to just make sure I'm live. So in case no one decides to jump on tonight, it will still be out on the YouTube channel. So let me just check. I'm live. So see if we're live. All right, I am live. So happy Sunday, everybody. Happy Sunday. Again, if you're new to the channel, please let us know in the comments box or the chat, the live chat where you're tuning in from. How did you get over to the channel? Don't forget to subscribe to the channel, like, share if possible, and hit that notification bell to make sure you know when we're live over here. I always forget to say that, so people always remind me when I kind of end the live to make sure I tell people to subscribe to the channel. So hopefully they'll come on back. So nonetheless, first, before we get into the conversation, I wanted to share an organization. So yesterday, Saturday, I had the opportunity to volunteer for a wonderful organization here in Atlanta. They are located in Atlanta, not only Atlanta, but they're also located in Alabama. What's going on, Jaron? He said, hello, Devon, everyone. What's going on? So Jaron is one of our moderators, and my dad, James Clark, and my cousin, Lang. They are the moderators. So I appreciate you guys being here to help out with the chat. So let me share this organization real quick. So you guys, if you're in the Alabama area, if you're in the Atlanta area, you can look at this. You can basically go and view this organization. It's called House Proud. It is an organization in which they help with repairs, maintenance, things like that for seniors and veterans, seniors throughout Atlanta right now, and also in certain parts of Alabama. And I had the opportunity yesterday to help out. I was trying to see if I could show some video, but I forgot to upload it on my computer. So nonetheless, yesterday we were painting some houses, and we were doing some gardening work. And I just wanted to give them a shout out. So if you guys are in the Alabama area and the Atlanta proper area, it says we're working together to create a city where seniors and veterans can age in place with dignity. So their whole purpose and their whole goal is to help seniors stay in their house, maintain their house, and because of that, they'll go in there and do repairs, whether it be the HVAC, the plumbing, electrical. Like I said, this Saturday we were painting houses, and we were also doing some gardening work, and they cut grass for the seniors. A very wonderful organization. So if you have a chance, check them out. Visit their platform. They are a nonprofit. They take donations to help with repairs and things as such in the state of Atlanta and also in certain parts of Alabama, because I don't know how much Alabama they're in. Nonetheless, let's kind of head into what we're talking about tonight. So I don't know if you guys are looking at the housing market. I don't know if you guys are either homeowners already, home buyers in the future, just want to know information in regards to what is happening in housing right now. So there has been reports in regards to the housing market, and then we'll also touch a little bit about what is going to happen in regards to, we don't really like to touch too much over here in regards to the economic stuff, but we do know that just recently, hopefully my computer doesn't start acting crazy. We do know just recently that our administration decided to go and set a couple bombs off in Iran in regards to that situation happening over there. So we don't know how it will affect the housing market. So we're going to talk a little bit about, try to dip a little bit into it, but not too far into it. Let me see. Hold on real quick. Sorry, guys. If you're new to the chat and you're just joining, please drop below and we'll jump into it. Sorry, y'all. I just want to do something real quick. I apologize for that. So I don't know if this will let me, how long this will let me stay. We might have to do this first. Let's do this article first, and then we'll jump back over to this article, because Housing Wire sometimes will not allow me to share without me. They already did it. I think they already put. I don't want to subscribe. Hopefully you guys can see it. We only have a short time with this platform. So let's just jump into this first, and then we'll get into the housing market being stuck. Hopefully they don't kick us out of this one. So it says, how will mortgage rates react to U.S. bombing of Iran? The answer might surprise you. So this is just what they're assuming. This is not true at all. It says on Saturday night, the U.S. bombed Iranian nuclear sites, sending shockwaves around the world and leading people to ask me what this means for mortgage rates. This type of global event can lead to significant market movements in oil prices, the U.S. dollar, and the 10-year and the short term. However, this year we've absorbed some unusual market pricing in reaction to events in the Middle East. Additionally, the mortgage market has been calmer this year compared to previous years. Let's dive in, and see if we can make sense of what might happen next. Okay, so now we're talking about the mortgage rates. If you guys don't know, just recently, hey, what's going on, Corey West? Thanks for joining us. I'm sorry if I'm speeding through this Housing Wire article, but I don't subscribe to them. So after a while, they will actually limit me from viewing it. So we want to kind of get as much information as we can off of their platform before they stop us from viewing without paying for it. It said the backdrop, calmer mortgage rates. It said the first things, mortgage rates have been very calm lately, even with last week's featuring a significant amount of economic data. A Fed meeting, if you guys don't know, the Feds did meet last week, and both the president and the FHFA director calling for the Fed chair to resign. They want Jerome Powell to resign. With all these events last week, the bond market reacted very mildly, and mortgage rates didn't move much either. If you guys don't know, Jerome Powell does succumb to his seat next year. I believe it's May of next year sometime. So I don't think he's going to step down no time soon. Overall, this year has generally had less volatility in rates compared to previous years. Here is the mortgage data from Freddie Mac showing the range of the 30-year mortgage rate this year versus the past few years. So this is the 30-year number of weeks at mortgage rate, 30-year fixed rate average. So it's showing you today it sits, this is according to Freddie Mac data, it sits between the sevens, between the higher sixes, closer to the seven as of, when was this article? So this was June 22nd, so that's today. So this is where we're at right now with the mortgage rate. Some people might see higher mortgage rates. As you can see over here, it could possibly splurge. In 2003, it splurged into like close to the eights. Right now we're in 2025, so it's around like low sevens, 7.11, and you might be able over here on the sixes right here where it's like 6.5ish, but it's kind of easy between here around 6.83 as far as Freddie Mac data for the 30-year fixed. So he said use the curl command. Okay, what's the curl command? I gotta see what that is. It's okay, I'm on the interstate, but listen, okay. I gotta figure out what the curl command is. I don't know what that is. That's teaching me something every day. I don't know what the curl command is. I gotta learn how to do that. And then, sorry, you guys. It says, in my 2024-2025 forecast, I anticipate the following ranges. Mortgage rate between 5.75 and 7.25. That's interesting. The 10-year fluctuates between 3.8 and 4.7. The most significant volatility event this year was the introduction of the Godzilla tariffs, which you all know about the tariffs, which caused the 10-year to drop below 4%. While I disagree with the bond market's reaction, it is ultimately the marketplace that dictates the short-term moves. Mortgage spreads did worsen when the stock market entered a bear market, but the increase was only 0.2 to 0.25 base points. After President Trump talked about tariff delays, the stock market recovered quickly, and we haven't seen stocks go into correction since the announcement. So we do know, I believe it's July sometime in regards to that 90-day freeze that Donald Trump put in place for the tariffs per se. We don't know what it'll bring. We don't know what type of deal they put in place per se. So we'll have to look again come like mid-July, end of July to see where the rates kind of go as far as mortgage-wise in the housing market. Right here. Oh, sorry, guys. Just that one cursor. It says better mortgage spreads have helped. This year, the mortgage spreads have been more favorable compared to the previous 2 years, which has limited how high rates can rise since spreads typically improve when the 10-year increases. Right? It says spread between the 30-year mortgage rate and the 10-year Treasury securities yield. So they're showing you in 2025, and this is the difference in regards to the 10-year. So we'll go into that. So if you guys don't know, I think we talked about this most times. Sorry, this is the we talked about this most time that we have the 10-year Treasury security yields. Sorry, this is the this is not the 10-year. I'm sorry. This is the mortgage, the 30-year mortgage rate per se, and this is the 10-year. We talk about this all the time where the 10-year kind of has a indirect type of flow in regards to the mortgage rates. So if anybody is looking to possibly buy in the future per se or things like that, it's always great to kind of keep your eyes focused or ask your lender per se in regards to what is the of course you want to ask them what is the interest rate as of today. If you don't know, interest rates, they do move, they fluctuate frequently. It could be daily, it could be weekly. They kind of move up and down, up and down, up and down. So you just want to ask the lender about that. You can also ask them in regard to if they watch the 10-year as far as like where is that kind of shifting to, because a lot of people thought when the Feds allowed the interest rates to drop that the mortgage rates would drop, and what happened as the mortgage rates at one time they actually went higher, and then the other time when it kind of shifted a little bit, they kind of stayed flat. They didn't really move. MH08 said, LOL, Carl link file, then open the file with a browser. It's how you can get behind paywalls widget works as well. Okay, see, I never knew all this, so I gotta try this thing. Curl link file, then open the file with the browser. It's how you get behind paywalls. Okay, that's good to know. So now I'm gonna be playing around with that to get around these paywalls, because nowadays, if you guys don't know, most of the things online, they want you to pay for everything, and I get it. People got to make their money, but I'm like, this is all everybody wants to pay. So this is just talking about more. Let's talk about the real quick in regards to the bond market. Why does this keep doing this? The bond market in regards to typically the geopolitical events in the Middle East tend to favor the bond market and the U.S. dollar, resulting in lower mortgage rates. So they say typically. However, this year has been different. For example, when Israel began its attack on Iran on June 13, 2025, we did not see the expected reactions in the bond market. Thanks, Jen, for sending that over. I appreciate it. In the bond market or in the U.S. dollar, it says, given the U.S. escalation Saturday night, it's important to monitor Sunday night trading in the markets. Follow, and then it's talking about following on Instagram. The latest U.S. action in the Mid-East may not lead to significant market movements regarding the 10-year and the mortgage rates unless more escalations occur in the coming weeks. So basically, they're saying just look at as far as what's going to come in the coming weeks. Right now, we haven't seen anything. He said, link, then the following. Okay, thank you. MHOA redirects the output from the curl command, sorry, to the file. All right, I gotta try all this, and then my friend just sent me an image and a link to how to do it. So I'm gonna try it. I have to try it after I get off, so I don't keep people waiting hear me trying to experiment how to figure stuff out. It says escalation will be key. Iran has announced. Why does this keep doing this? Sorry, you guys. Every time I go and click, it keeps scrolling it back up. It's doing it again. I'm sorry, you guys. My computer is acting crazy today. It says, okay, we about to not click it no more because it keeps doing it. Anyway, Iran has announced its intentions to close the Strait of Hormuz. An action I view more as a theoretical maneuver than an immediate threat. Nonetheless, we have to monitor the situation closely. So it's basically talking about monitoring stuff, and possibly oil prices may increase, but they're saying as of right now, they don't really see an increase in the mortgage rates. They typically think with things like that. Of course, you know, when things happen, a war possibly could pursue. What might end up happening is that it could possibly cause mortgage rates to actually shift down and to shift up. Again, this is just something in which an economist per se wrote. Okay, people keep texting me now. an economist per se wrote about. We don't know where it's going at, but we do know things are happening, right? So because of things are happening, a lot of people, there's a lot of the housing market right now is stuck. Not only is it stuck because of the now because of this uncertainty in regards to this daggone craziness that the Trump administration decided to input their views in per se, but also it's stuck in regards to 4 other factors. And we all kind of talked about this before over and over again. I feel like we're kind of beating a dead horse now because we kind of talk about the same things over and over again. But it is good to know, if you guys aren't following along, what's kind of happening per se, is to have about an 80% success rate with that. Said you're not going to get into the Wall Street Journal with it, nor the Financial Times. Okay. All right. Well, at least we got an 80% success, right? MHOH. So I do like the Wall Street Journal, but I start reading some of it and then it puts up the paywall. And I'm like, oh, dang it. I try to screenshot some of it now before they kind of enact the paywall if I want to kind of read more. So it says, well, why the housing market is so stuck in 4 charts. Of course, we know it's stuck because the mortgage rates, we know the high prices, and we know that economic uncertainty all play a role in the weak home sales as of right now. And like I said, with this recent attack as of yesterday, we're sitting on the sidelines trying to see what else could happen to this housing market. And not only the housing market, just the U.S. in general. It says the U.S. is in the middle of the typical peak home buying season. So if you guys all know, every time you hear different realtors talk or real estate professionals talk, they always talk about, oh, the spring, the summer season. This is the typical season in which a lot of people purchase homes. Again, I'm in the Georgia area. So this metropolitan Atlanta, Georgia area, or Georgia in general, we haven't really seen much action. We've actually seen a dip in prices, of course, because we have a lot of new home construction builders down here. Again, every market in real estate is very condensed, or per se, in regards to what is happening. It's very local, should I say. And because of that, what's happening down here might not be happening up in like Jersey, Connecticut, all those places. But it says all signs suggest that the market remains sluggish. Says the housing contract activity slipped sharply in April, even though buyers had more inventory to choose from. Meanwhile, buyers and sellers are locked into something of a standoff. More sellers are listing their price properties, but prices haven't fallen much, and buyers are being picky. So again, as we talked about, last time in regards to if you are going to list your house right now, if you are a seller right now and trying to list your house, being mindful of where you list your house at, make sure the price is right, because if you overprice, you might miss out on any type of traction in the house. And then on top of that, when you go to shift it down later on, it could already mean that going forward, even with the decrease in the price, you might not see any traction either. I've had that happen with a couple people, either that I've worked with per se, or a couple of my colleagues have listings in which they put on a market because the seller wanted to put it at a higher price. And now with the market shifting and them not wanting to put it at the price that makes sense to the market or below market price. And now I'm wanting to drop the price now. And they're like, oh, why we're not getting no people coming? Why aren't we getting any buyers looking? And I keep telling people in this market, especially again in the Metro Atlanta area and in Georgia per se, there have been so many home builders who have built down here. They started building last year, maybe they broke ground last year, and their inventory is now coming to market. They're slashing prices. They're offering incentives. They're offering interest rate buy downs. And a lot of the resale now in this Georgia market is getting harder to sell because people are still coming to market at a certain price. But I also notice more and more is that from my angle, and this just from what I'm seeing from the conversations I'm having, a lot of the sellers that are trying to trying to list right now, they actually probably bought in 2021, 2022, 2023, even some 2024. And I'm gonna see if I can pull it up in our MLS. I might not be able to pull it up, but I'm gonna try to see if I can show you guys. But a lot of these people are selling now, and what's happening is because they're selling, they're trying to get out without having to bring anything to the table. And it's hard because with the shift in which we're seeing right now in this metro Atlanta area is that there's so much more inventory coming to the market, and then there's a lot of new construction in our market too that's popping up. And with that happening, we're seeing a stagnant situation, very stuck in place. Nothing's really moving, when it comes to the resale. And I'm not saying no resale is moving, but I'm saying that it's a little harder now to resell your house. If they're in an HOA, not interested. Yeah, that's another thing too. MHOA. If they're in an HOA, a lot of people are like, I don't want to be in an HOA. The HOAs, because of the inflation in the economy right now, HOAs are going up because, of course, you have to maintain, whether if you have a pool in your HOA, tennis courts in your HOA, if they're maintaining the common grounds in the HOA, if they're maintaining the structure of whether it be townhomes. Typically townhomes don't really maintain structure when it comes to single family homes, but I guess everybody's HOA is different. But down here you might see some HOAs maintain the structure per se, or they might possibly, cover the roof with some of their insurance. So different things as far as HOA. And because of that, the HOA prices are going up now. So you might have got into an HOA subdivision that had an HOA. Maybe your HOA monthly was about, let's say, $50 a month, and now it's going up to $200 a month. So now people are trying to exit out of these HOAs. They're getting stuck. Some of these HOAs, if a lot of these subdivisions too down here, and it's just in Georgia. I don't know how it is in other places, but when some of these sellers I meet, they go and they go to listen to their board meetings per se in regards to what's happening in their community. The HOAs might say, oh, some people are not paying their monthly HOA dues. They might get hit with special assessments. Again, because of the economy right now and the inflation, you're seeing the gardener going up, the lawn care service going up, the pool maintenance going up. So because of that, it's increasing the HOA monthly dues. So there's a lot of things that's kind of happening now that's kind of creating a more stagnant market. And again, I'm basing this off of what I'm seeing in Georgia as well, because that's where I'm at. But it's a lot of stagnant stuff kind of happening. Hey, Dad, how you doing? So those things like that are causing the market to be stale right now. And what's kind of getting people too is the new construction being built down here in this metro Atlanta area. You're getting, if you are buying new construction now, you're getting possibly smaller square footage now. You're getting a lower interest rate, which is, of course, people want a lower interest rate because of the home prices, right, or higher. And then you're also getting not enough yard space per se as back in the day. Back in the day, you got houses that were built outside of HOAs. They might be on like maybe a half acre, maybe an acre of land, depending on where you're at. And the city has probably never been like that. More like the suburbs, you're getting more of that acreage. And because of that, people want more land nowadays. People want to be able to do what they want to do with their land. So I'm seeing a lot of people now, buyers, whether young or old, they might be wanting to shift out of an HOA. They might want to shift into their own piece of land. They might want to, be able to have control of what their house looks like, what they can do. So you are seeing a shift in regards to, especially down here in Metro Atlanta area, where you're seeing more homes pop up on the market and they're just sitting. As mortgage rates aren't helping, which we talked about, they've held remarkably stable this year, hovering between 6.8% and 7%. Rate stability can be a good thing because buyers know what to expect from financing, but stability at relatively high levels prices many potential buyers out of the market. Price many potential buyers out of the market altogether. Many would-be buyers find they're able to rent a much larger home than they can afford to buy. So that's another thing too, right? People are like, hey, what's going on, Lang? What's going on? I know people are coming and going. Sorry. If you guys leave us, if you just jumped on and then you left us, please just don't forget to like the video. I don't want to put you to sleep and I don't want it to be a redundant topic, but this is what's kind of going on. So if you do happen to leave, like I said on the last slide, even if you just hit the like button to kind of get us through the algorithm. Also subscribe to the channel, maybe come back later on if you want to watch it. If not, again, we're trying to get our viewership as far as public view watches up. So just put me on pause if you hate, or put me on mute if you hate hearing the sound of my voice, just so we can get the viewer watch ship up. So I appreciate it. I was on 706, but I thought I hit the enter button. LOL. No problem, no problem. That's okay. I appreciate you coming back. I know this YouTube stuff can be crazy, but I appreciate you being here. Like I told people, we're kind of discussing this, and a lot of this conversation might be redundant, but I just want to tell people like where we're kind of moving at, week by week. Some of this stuff might pop up, similarities per se. We have been seeing the shift. Again, it depends on what market you're in. Of course, everybody knows I'm over here in the Metro Atlanta, Georgia market. So our shift has been happening very, it's been happening probably since, I'm going to say 2024, as far as me really seeing the shift. Hey, what's going on, David? Oh, David, you changed your avatar. I love it. I love it. He has a new avatar. I love it. So, and then what I'm seeing in regards, like we all know the interest rates, right? This is the conversation I actually had recently at my office. We had an office meeting just past Wednesday. And we have 27 offices down here in this Metro Atlanta area. And I always go to 2 of the office meetings. And they're always like, Devon, you're at all these office meetings. Don't you have your own office? I'm like, yeah, but we have a big company, brokerage per se, and I want to be at all the office meetings that I can be at. I just want to, suck up information and be around different colleagues to see what they're kind of experiencing in this real estate market. Nonetheless, we were talking about the interest rates, and we kind of talk about this all the time on this channel. Like I have a colleague of mine, been in the real estate since 1980s. Said even when he bought his house in the 80s, that his interest rate at the time was about 19% when he bought his house. And I keep telling people, and we had this conversation, and they were like, everything is relative to the market, right? Everything is relative to the time frame in which I agree upon, right? But one thing I do say, even at the 19% levels of interest rates, I don't know how much, I think he might have told me how much his mortgage was, but I forget. But I'm like, we have to be relative to the 80s to now in the 2020s in regards to that income was still shifting up in the 80s, in the 90s. And then also home prices were a lot cheaper. And I'm not saying, in regards to when you put 2 and 2 together, I guess they're looking at it on paper. When they put 2 and 2 together, they're like, well, it's almost bringing in the same monthly mortgage payment. But I'm like, the time is different. I feel like right now we're in a different economy. And this is what I talk about all the time with my colleagues. I'm like, you have the Gen Zers, you have the millennials, and the people are, and I get it. They'll be like, oh, well, back then people were still getting laid off. Back then, things were happening back then. But I'm saying like nowadays we do have layoffs. Of course, they're not massively affecting every region per se right now, but we have the layoffs. We have home prices being at record highs. This is the highest home prices have ever been. And even though interest rates, because they're always like, well, interest rates are not even high compared to when I bought in the 80s at 19%, or somebody else said I had an 11% interest rate. And so they're, comparing those times per se. But I also said, okay, in those times, your mortgage, your income was shifting up. You were able to gradually move. You might have bought your house for, let's say, $60,000 or $40,000. Because when I look at some of these people's like houses when they bought them, and maybe the late 70s and the 80s, I'm like, oh, you paid $50,000, $60,000, depending on where you're at, right? It's all relative to the state and the local area in which you're at. And so I'm like, when you take those two, that amount plus that interest rate, it's kind of putting you more into an area where it can still be, affordable and you can maintain, because your income is going up, you're growing in different positions, and you're getting raises and promotions. And then we compare it to now, this economy where you got a $60,000 house you might have bought in the 80s. And now this same house that you bought in the 80s, $60,000 is now $400,000. So now you got somebody trying to resell that house for $400,000. You have an interest rate maybe between 6 or 7%. And then on top of that, you put in place, like their job is not giving them a promotion. Their job, they have an uncertainty of possibly getting laid off. You got the crazy Trump administration setting off bombs in a different country. Hopefully that don't flag the channel because I said bombs. I don't know what lingo I can't use. We have a possible, like David said, we're probably already in a recession. It feels like. So you have like all these other factors where it kind of creates things where people are like, oh, I don't know if I want to buy. It's like different risk tolerance per se. Like I said, yes, Devon, stay in the room. Yes, people, please stay in the room. He said that is funny. Lang said, wow, 19%. Yes, he said 19% when he bought his house. The algorithm is real. Yes, the algorithm is real. Please like the YouTube video, please, you guys. Hey, Angela, how you doing? And yeah, so you have all these different factors that, and I'm not saying what occurred in the 80s, because the 80s was happening. I was a little tot running around. But, I did experience the 90s, and I always say it's hard to compare those two different eras. He said, I know where I worked, there are cost-cutting measures happening. Yeah, so that's what's happening now. So because of that, you have this uncertainty of what's happening where people are like, things are being stuck, people are not moving and around. People don't want to shift in life when there's so much uncertainty, there's so many changes happening and occurring, because just in a normal life, day to day, without all this type of worldly stuff going on, we live in a certain world, like day to day as a person, right? We don't know what's going to happen tomorrow. So now when you put in these other risk factors per se, people are like, I don't know, and even though a lot of my colleagues, and I'm never telling people not to purchase a house. I'm not telling people not to sell a house. I'm just telling people what, the conversations that we have, the things that are going on out here in this world, because again, I can't predict when someone is ready to do what they want to do in life. I can't predict when somebody is ready to sell their house. I can't predict when somebody's ready to buy a house. Again, I understand what one of my colleagues said. Everything is relative to people's lifestyle, relative to where they're living at, relative to what's happening per se. But I'm just saying that this is what's causing some of this, people being stuck. And that's what's also causing so many people now to turn around and they're like, okay, I'm going to go rent, because they might feel like it's cheaper to rent a single family house. And because of that, you have so many, you have so many new construction builders now even building buy to rent, rent to own, or more not really rent to own, but more rental communities where they're creating a mass amount of townhouses, especially down here in Atlanta. I've been seeing like different areas where they're creating a lot of townhouse structures where they're only rent for rent. I've also been seeing, of course, more of these builders building more commercial things as well, as far as like rental apartments and all this stuff. I don't know how it'll do in regards to if the rent will go down, because there are so many buildings kind of popping up, and because of so many people shifting around now, and some people who even are currently renting are like, hey, I'm just gonna go move back in with my parents. I'm gonna go get a roommate, or I'm going to do a multi-generational living per se with cousins and families and friends. And so now people are not renting as much either. So I don't know where that's going to lead to. It says there was a little bit of failure to launch feeling this spring, said Hannah Jones, senior economic research analyst at Realtor.com. She said high home prices persist, high mortgages rates persisted, economic uncertainty picked up. All of that we see reflected in the housing data. So that's what we were kind of touching on in regards to that uncertainty, those high prices, those interest rates staying stagnant in the 6s and the 7s. She said, what will it take to bring life back to the market isn't clear. Lower rates would certainly help, but there's little reason to think they'll return to 3 or 4% anytime soon during a deep recession. Recessions come with their own housing market trade-offs, like higher unemployment that reduces demand and elevate mortgage delinquencies. And so that's another thing too. We don't want to get into a whole mortgage delinquency situation. I'm gonna be honest. I know some people feel like if we do see a shift in lower interest rates, we'll see more people buying. Again, I think that just depends on where your market is at. I feel like down here in the metro Atlanta area, the Georgia area, I don't feel like we'll see that much of a change because, like I said earlier, we already have new construction builders building and they're buying down interest rates. They're locking people in for 4% already or 3% with 30-year fixes down here in Atlanta, Georgia, in the metro area of Atlanta. So I don't see, and if they're doing that down here and we're kind of, at a, I don't want to say not at a standstill per se, but we're moving slowly as far as growth. We're seeing, of course, home prices dipping. We're seeing new construction builders dipping home prices. We see them offering such high incentives. And so if they're already doing it, so if they're not moving the needle per se, I don't really see it moving it going forward if they were to dip these interest rates down to 3 or 4. But again, that's relative to your market. I don't know how you feel about that, David. I don't know in your market because I know you guys were a little different from down here in Georgia, but it might help in some markets in regards to, let's say, maybe in Jersey or different things like that. If they brought those interest rates down, it might help kind of speed up or make more buyers come out. But down here in Georgia, I feel like we'll probably remain the same. I don't have a crystal ball, so I don't know. But I'm like people. I literally talk to people all the time, and they're not even buyers. They're just either people that want to buy per se. And they're not like current buyers, but I always hear people say, it's too expensive. It's unaffordable. Housing is unaffordable. And then I'll ask them and say, so if they brought the interest rates down, would you buy? And some of them are like, no, I wouldn't buy. I would want both to happen. I would want lower interest rates and home prices to come down. And then sometimes it's a shock to people as well, too. And we know as time goes on, prices do change. But sometimes because they're going like to Zillow, and we all know Zillow. But because people go to Zillow and they see what somebody might have bought their home for, let's say 10 years ago, and they're looking at what they're pricing it at now, and they're like, oh, that's ridiculous. This is like $300,000 more than what they bought it for. And of course, we can't count people's dollar and what they bought stuff for and different things like that. But people look at stuff like that too. So, and they're waiting. Some people will literally click or save a house and they'll wait. If the house is currently listed, they'll wait and see how much they drop it down. And if they feel like it's a fair gap between the drop and what they bought it for, people will then pounce or like hop on buying the house. So it's a lot of different factors happening, a lot of different things that people kind of do. But I don't know. Let me know in regards to everybody that's in the chat right now. Would you, let's just say, even if you're not trying to buy a house right now, would you buy a house? Let's just say, as a hypothetical, if the interest rates went back down to 3% or maybe the low 2s, would you turn around and jump in your current market? Let's take it from your market right now around what you're seeing. If you're on Zillow or in the area, if you drive by a house and you see like these home prices, when you drive by the house, would you go and buy a house? Let's just say if you got a 3% interest rate as of right now, and you saw how much the houses cost right now, would you go out and buy a house? I just want to take like a little from my people that are joining me tonight, a little poll. And then if anybody's watching this on a replay, put in the comment section. I just want to see what people would do, because the people I talk to, and I haven't surveyed all of America. I'm not the U.S. Census Bureau, but the people I talk to, they say no, they still wouldn't do it. So I don't know. The government has to lower interest rate or people. I think he was still typing. He must have cut some of it off. MHOA say even at 2%, price is still too high. Yeah, that's what I've been hearing from people. Even at the 2%, David said he would. So see, everybody's situation is different, right? But I've been hearing this a lot. What MHOA has said, people are like, even at 2% interest rate is still too high. So I don't know. But again, there are people, like David said he would, there are people that'll still say, hey, this is the perfect time for me to go, even with the interest rates being lower. So, it's all relative again to how people move. A lot of people will be living on the street. Okay. You said the government has to lower interest rates, or a lot of people will be living on the street. Yeah, hopefully we don't get to that. We pray to God we don't get to a lot of people living on the street, even though we have a big homeless population in America, which we don't talk about often, and we really need to dive into that, because people will be shocked, especially down here in the Metro Atlanta area. There are like so many homeless people, and they're not just veterans. Normally, yes, but the climate state of the world, because of the who, I don't think so. Okay, yeah. Well, we know that interest rates ain't going that low. I know he's constantly this daggone guy out here. He's trying to get the Fed president to to quit. He's trying to, get the Fed president to lower the things. And right now, I think it's a clash between the Fed, Jerome Powell, and Trump in regards to like see who has the biggest woohoo. And it's like it's becoming more of a stance between them both of them as a narcissist instead of like what's happening in the world and the American people. And they don't really care. So it kind of sucks. And I don't want to get too on a political scale per se, but that's the reality. They don't care. It's just like, okay, we're going to do, it doesn't matter. He said, but David's into rentals. No. Oh, David. Oh, yeah, David. He does. David, you do buy a lot of investment property. So it would make sense. Again, like that's what I say, everybody's situation is relative. And with high prices, rents would still be high on those properties. So it's all relative to how people look at the housing market. If some people that are feeling like this will be their forever home, they're going to stay here longer. They might feel comfortable enough. Some people might say, I guess, like I said, I talk to a lot of people, and I think it also depends on the area. Like I said, the area that you're in, the situation that you're in. But when I see a lot of people, it's almost like legacy homeowners. When I see a lot of people in certain communities, even when we list houses nowadays, right, and you'll have a next door neighbor come and they'll come to see the house, right? Because I'll door knock the community. I say, hey, I would love for you to come down, check out this house, give me your feedback, give me your opinion, whether it be price, whether it be the way it looks, different things like that. And if you know somebody that's interested, that's always kind of wanted to be in your neighborhood, this is the opportunity. You can pick your neighbors. You can, have family members come, friends, and be next to you to sit with you and be in the community as you grow old in it, per se. And then they'll come down, they'll look at the houses, and they'll be like, what? This house is expensive. This is all this, and I wouldn't pay for this, and I wouldn't do that. So I guess I've taken a lot of those type of people. So they might not possibly be, the I don't want to say the best people to take in information from, but is when you hear so much of the people saying it about the prices and about different situations, you have these conversations, you realize how some of it is kind of detached from the normal the reality of what most people personally might make as an income per se. I know down here in the Metro Atlanta area, they'll say like the average medium income in certain areas is like 76,000, 70 something thousand a year per se of some of these areas. And I'm like, they're taking the highest amount of what the income is and then the lowest amount, and they're creating this average. And I always say we need to look at the medium because there's a lot of people who don't make six figures. And so we can't just assume everybody makes six figures. And then we can't assume that these people who are making six figures will have that six figures job going forward. And we want the purpose of when you buy a home, and it might change for some people again, but I know most people that buy a home that's a forever home, they want to buy the home and then they pray that they can get and pay that 30-year fix of that home off before they retire because they hit a fixed income. So they want that fixed income to be able to sustain them in their house as they grow older. So then that way they're comfortable with their spending and their necessities as they get older without them having to have this big monthly bill per se, right? So MHOA said, isn't the mortgage rate tied to the 10-year treasury? Powell has no control over that. Yes, the mortgage rate is indirectly, so it's not directly tied to it, but it's an indirect situation in regards to the 10-year treasury. And yes, Powell has he doesn't have no control over that per se, because the 10-year treasury is more based, it's like the bond, it's like a bond market really, right? According to what some of the lenders I talk to say, and it's more of like people buying bonds and all that stuff. So just because you get rid of Jerome Powell doesn't mean that the treasury will all of a sudden become all of a sudden dip down or whatever they're trying to make it, Trump wants to make it to do or whatever in order to lower different things. So it's like, so it's indirectly type of tied to it, where they say one of my lender friends that kind of looks at the 10-year treasury, he was saying that the more bonds that are bought, the lower, sometimes it either will stay flat or it'll go dip a little lower in regards to the mortgage interest rates. Typically that's what typically happens. And then the more people take away from the more people take out of it per se, or with the bond per se. Hopefully I'm saying it right. That's when it can kind of dip up a little higher per se. So yeah, but it's definitely I think Trump is trying to get him to lower the interest rate. So, and then in turn, hopefully it will help to soften indirectly the mortgage rate. But we already saw that happening, right? Where the Feds had their meeting last year, the beginning of this year, and they lowered the interest rate per se. People thought that we were going to actually see a shift in regards to mortgage rates dipping. The first time when they did it, I believe I'm trying to remember, I think it was like back in September, October-ish when they first did it, and we actually saw a shift up, and then it kind of softened back down to stay where it was at already. And then this time again, when they did it earlier this year, we just stayed steady. We didn't really see a dip. So we've been hovering in that sixes, low sevens type of water for a while per se. Sorry, you guys. It says home price growth has outpaced wage inflation. So we already talked about this a little bit, how home price growth versus wage inflation. It's showing like the median home price. This was in 2023. It says for decades, home price appreciation has been outstripping earnings growth. It says in the last 25 years, home values have more than tripled. The steepest climb came between 2020 and 2022 when the pandemic moves and ultra low mortgage rates spurred a buying frenzy across the country. Meanwhile, median incomes from 2000 to 2023 did not quite double. And we talked about that as far as income levels not doubling and different things like that. Again, if you guys are joining me, don't forget to like the video. If you are watching this on the replay, don't forget to comment below anything you might hear or want to talk about. And don't forget to subscribe to the channel. I'm trying to get better at reminding people to do that because everybody like, Devon, you don't never tell people to subscribe or like the channel, the video. It says people with 3% mortgage rates are hanging on to them. So this is talking about, again, how we saw people in the time frame get those 3%. Some people got 2.9%, 2 point something percent. So we'll kind of just shift to that because we kind of already talked about this a little bit. And then they're talking about, again, the lock-in effect. We talked about this before where a lot of people now are not wanting to move or shift because of their mortgages. However, like I said, too, even people who got a 4%, 3% that might have bought in 2022, I hear some sellers, I talk to some sellers now that want to, that's trying to sell, you know. Yes, MHOA, don't forget to like and subscribe, please, you guys. Don't forget to do that. I really appreciate it. It's free to help me out over here with a like and a subscribe. I appreciate it. So yeah, so we got those people, but like I said, some of those people are selling too. And I've talked to somebody, you know, wanting to relocate from the state of Texas to Georgia, and I'm like, you want to lose your interest rate? And they're like, I just want to move because I either want to be close to my family because, you know, things are happening. I just want to shift. So you even got people who have those interest rates that are still wanting to shift and they're okay with a higher interest rate, you know. Oh, and the notification bell. Yes. And don't forget to hit that notification bell so you guys can know when either a video is uploaded or when we're live. And I always appreciate everybody coming on the live to have this conversation in this chat because we're all in this together, you know, to educate ourselves, inform ourselves about like what's happening in our economy. There's so much going on, so many moving parts. So we just want to be aware. So this is kind of touching on that in regards to that lower interest rate. So we don't want to talk about that again because we already talked about that, you know. And then it says supply is up, but list prices are falling. It says as for sale inventory rises, prices hold steady. So we were talking about either prices holding steady or some things kind of dipping down in prices. So we're showing you, right, this is in 2016, sorry, talking about the active inventory. So they're showing you the active inventory and how from 2016 we were at close to 1.5 million, and then it was going all the way down the active inventory. So this active inventory, how it's going down all the way to 22. So we know in the pandemic, all that stuff, they were saying that the inventory was lower, and then it's shifting back up. And then this right now is so this is where the active inventory is at now as May of 2025. So we're kind of climbing back up there to meet where we were at in 2016. We're climbing back up there now of 2025. And then this is showing you the medium list price. So in 2016, the medium list price was $259. And now, as of 2025, the median list price is around 400 something thousand. So we are, of course, getting the inventory back up. However, the home price, the median home price, is definitely, you know, is different as far as from 2016. So this is what's going to cause more properties to kind of sit and stay stagnant on the market. And again, it's all relative to where you're at and where you are at in your life right now. It says for sale inventory has been rapidly increasing, which we kind of looked at the chart above. And then it says right here, high mortgage rates have dramatically reduced buying power. It's all about mortgage rates. The National Association of Realtors chief economist Lawrence Yun said after home contract activity had its worst April since 2009, lower mortgage rates are essential to bring home buyers back into the housing market. All right, so we kind of read about this. So it's all these same factors, and like I said, we typically, we've been reading about the same thing for the last coming weeks and the last coming days in regards to that. So I have another question for everybody that's kind of tuned in right now. I guess name 2 factors, if you can, in the chat. I would appreciate it. That would have you, again, this is hypothetical. Not saying you're currently trying to buy, but what 2 factors would you say could help the younger generation per se, or somebody that you might personally know right now? If you talk to any family members, any friends, what 2 factors have they said that will help them or what make them want to buy today in this economy? So just let me know what 2 factors would it be. Like I said, I've talked to people. The 2 factors that I've heard people say is that they would love the home prices to come down and the interest rates to come down. Those are the 2 factors that I've heard people say. And of course, well, I guess I could do a 3rd factor too, and they don't want to be an HOA. But that's a whole nother factor. But the 2 main factors that I hear people talk about are home prices and interest rates. Is it people who have no mortgages don't want to sell because they can't afford higher mortgages? Exactly. People who have no mortgages, they don't want to sell. So, and it makes sense. And I tell people, hold on to your property, especially down here in Metro Atlanta area. Like I said, there's a lot of people who bought in Atlanta in the 70s and the 80s, and they're still in their houses. And a lot of them, like I said, they're legacy owners where they're passing it on to their relatives, whether it be their daughters, or maybe they're married and somebody passes away, and it just goes on to the heir per se. So a lot of these people, and they'll always tell me too, they're like, I wouldn't be able to afford to buy in this economy because, again, as you get older, you retire, you get a fixed income, and a lot of these people that want to transition out, even if they do sell, some of these homes might need to be repaired. They might not have the money to repair, to make the necessary repairs to fix said properties. And so what's happening is that they might end up getting an investor per se that comes in, lowballs them, because of the repairs needed for the investor to then flip and be able to make their return of investment when trying to resell in the area or the community they're in. So these seniors might get, let's just say, because I'm just going to take Metro Atlanta for a situation, right? You have a lot of these homes down here now that are legacy owned homes that older people owned. They bought back in the 80s and 70s. The repair work needs to be done. They don't have the necessary income to do so because they're on a fixed income right now. So if they were to turn around per se now and sell, an investor would come in and they would probably only sell it for, let's say, high 100,000, maybe low 200,000s. And then if they're trying to turn around and move into a new house or another house, the houses now might be worth 300,000, 400,000, 500,000, depending on where they're trying to go to. And then might have an HOA, a monthly HOA. And if they come from a community that never had an HOA, now that's an additional expense. They're like, they can't afford to move. And most of the people that I'm talking to that are kind of older that want to kind of shift, they're like, I can't shift I can't afford a mortgage. I can't shift with a mortgage. So they're like, I'll just stay here, So that's what's kind of happening. That also means we're stuck. Yeah, that's why I said we're kind of like this live. I kind of went around a whole mulberry bush to kind of come back to what MHOA said. We are stuck. Like, people are stuck in their homes. People who traditionally might want to move might not find it feasible to do so. Again, there's always going to be people that move. There's always going to be people that buy. There's always going to be people that sell. Doesn't matter what economy, what type of economy that we're currently in, whether we're up or we're down. Most times when we're down, that's when they said what they said. That's when the blood is in the streets per se, right? Where a lot of these investors or people that have money or people, they come out and they grab stuff up at cheaper prices, and in the long run, they sit on it as a long-term goal, a long-term gain per se, in regards to real estate. Like there are a lot of houses down here, again, in the Metro Atlanta area that are boarded up, and these investors might have bought in 2020, and they're sitting in the community, they're boarded up, they haven't flipped them, they haven't turned them. I don't particularly like that they allow these people these corporate investors to do that, where they buy a mass amount of homes down here in Atlanta and Metro Atlanta that are boarded up. I don't like it because the purpose of buying it, I would hope that they would put in place that within a certain amount of months, whether it be 12 to 18 months, you got to do something for the house, right? Fix the house, repair the house, do something. And a lot of these people are just sitting. And when I look up the tax records, I'm like, dang, they bought this in 2021. They bought this in 2020. They bought this in 2018, 2019. And it's just sitting in the community, abandoned, boards on the window, and they're not fixing nothing. And the investors, again, they have their whole situation where it's a long-term gain for them. Devon, remind everyone to subscribe to the channel if you're enjoying the content. Yes, we said that earlier. Don't forget to subscribe to the channel, you guys. Hit that like button, hit that notification bell, like MH08 said as well. He said, yeah, James, you said that and kidding, but subscribe. Yes, please subscribe. Please subscribe, you guys. So yeah, so we'll jump into this a little bit, and then I won't hold you guys too late tonight. So this is just talking about like home construction stalls as cost rises, demand softens. So even builders are seeing it too. Like I said, they're offering those incentives, they're doing different things, but they're like, hey, we're gonna have to slow this down because people are not buying, like we thought they were going to buy. So housing starts and permits fell in May in response to economic and market factors, while buyers continue to hold out despite easing mortgage rates. So it says summer is usually busy season for builders, but the latest construction numbers suggest there will be less hammering this year. Housing starts and building permits slowed significantly in May, according to data released today by the U.S. Census Bureau. For single-family homes, starts were down 7.3% compared to a year ago, while permits were down 6.4% for the same period. Completions were up slightly 0.1% year over year. The slowdown became more significant recently, with overall housing starts, including apartments and condominiums, down 9.8% in May compared to April, at the lowest level since the early days of the pandemic. Says multiple headwinds for the builders. The current microeconomic environment, coupled with housing market shifts, appears to be taking a toll on the construction industry. Builders face higher financing costs, tariff uncertainty, softer demand for elevated rates, increased completion from rising existing home inventory in key markets like Texas and Florida, even in high inventories of their own. And I don't know how to say this name, Odata, I don't know, Kushi, I don't know, Kushi, I'm guessing. Deputy Chief Economist, at First American. The mix and weighing on home builder sentiment that was reflected in the National Association of Builders June survey, which found that builder confidence fell to its third lowest level in 13 years. And it says the NAHB report also noted that 37% of builders were cutting prices this month, which we kind of talked about earlier, how the builders are cutting prices. So it's so much uncertainty in everywhere. So it's not even just the typical person trying to buy, the typical person, maybe if you're an investor trying to buy, there's so much uncertainty across the board. And like I said, again, I'm only factoring what I'm seeing down here in the Metro Atlanta area, but just from the Home Builder Association also stating that they're cutting prices. This is happening and across the board. It says the highest share since it began tracking price cuts in 2022. This underscores the effect of current trade war on home building, augmented by worsening labor shortages and growing concern from builders about housing demand. So again, they're also concerned because some of these builders were also taking on certain nationalities per se that were helping to build some of these construction sites. And now we have this government deporting some of these, these people, because a lot of these builders, they'll subcontract to a different contractor, and then that contractor will get different workers. And some of these workers might be like immigrants. They might not, hold status in the United States of America, because a lot of the immigrants, they build a lot of our houses in new construction in America, and some of them are getting, detained. And so it's so much going on, you guys, so much going on. He says, MHOA said building permits are a good indicator of future economic activity. Washers, dryers, TV, refrigerators, you name it. He said, "Watch." Hey, it's crazy. Lang said, "Are builders cutting prices to sell homes?" Yes, builders are cutting prices to sell homes. They're offering interest rates, buy downs, 30-year fixed rates. They're also offering incentives like closing costs, maybe paying a year of your HOA. Down here in Georgia, typically you don't see a lot of new construction down here that come with finished basements, or maybe not a basement at all. So you might get some new construction sites down there like, hey, we're going to finish your basement. If they're building basement lot homes, you might get some new constructions, because most times they don't provide you with any like refrigerator or stuff like that. So you might get some people saying, hey, we're throwing in a refrigerator for you. So there's so much going on down here. Again, this is Metro Atlanta area. But like I said, this article is a nationwide article per se. So it might be happening as far as builders cutting prices and stuff in your area. I would just, drive by there, inquire, you don't have to get on their list. They might say, oh, sign up for the list. You're like, no, I'm just driving. I just want to inquire. I don't want to be on the list. I'm just looking. Don't be pressured to put your name on the list, because they will contact you over and over again. I'm not sure, but off the top of my head, I'm thinking the lending process to be simplified. Although it's not that bad, it wasn't for me, but maybe an explanation on the guidelines. I don't know. Okay, so you're saying one of your factors would be simplifying the lending process. Yes, definitely. You want to understand what you're doing, simplification, different things like that. Lang said, what are buy downs? So buy downs are when the builder or the seller or the buyer, you can talk to the lender and you can pay a certain amount of money to buy down your interest rate. So they buy them down in points. And so it all varies depending on the market, depending on where we're currently at in regards to the rates and how much it might cost, because it shifts. Like I said, the rates change daily, weekly. So you have to ask the lender, say, hey, how much would it cost for me to buy down this much in regards to my interest rate? So if you're at a 6%, how much would it cost to buy it down to a 5%? And then they'll say, oh, it costs, I'm just making up numbers. My number might be off, because again, it changes depending on your state, depending on your area, depending on your lender, all those and different factors changes how much it might cost. But they might say to buy it down one full point, it might cost about $15,000. Again, I'm just making it up. And then in turn, maybe if you're getting closing costs from a seller, you can turn around. If they're giving you, let's say the seller is giving you $15,000 in closing costs, you can then say, talk to your lender and say, hey, is it possible with this closing cost, can I buy my rate down? And then how long? And then what is the thing? Is this a 30-year fix? Is that's how much it costs for a 30-year fix for the whole point to buy it down? Or are you doing a actual buy down, which means that for, let's say if you do a 2-1 buy down, that means if the interest rate currently, let's say, is 7%, the first year, since it's 2-1, the first year would be, was it 2-1? I'm trying to remember if it's 2-1 or 3-1. But the first year, I might be off. I got to remember my numbers. But the first year, it might be, if you're doing a 2-1, it might be 5%, I believe. No, I think that's a 3-1. First year might be, 5%. And then the second year, no, that's right. The first, if it's 7%, and if I'm wrong, if any lenders come in the chat or see the video later on, put it below, correct us below, because I might be off. But the first, if it's a 2-1, if you're at 7%, the first year might be 5%, because you're buying it down 2 interest points. The second year will be 6%. So 1 year will be 5%, second year will be 6%. And then the last year, it'll be locked in to wherever the current interest rate is, or whatever you kind of locked it in at the beginning. It typically is like that. That's how it typically goes. But you can buy down the interest rate if you want to. So those are typical buy downs. I have a video on my YouTube channel platform that talks about buy downs and giving you more of like what a buy down is and how it kind of works. So hopefully I explained it right. If not, a lender will come back on here and they'll check me. But if not, head down into my videos and I explain like what a buy down is, so you can kind of, and right there I explained it fully, and I did like a 3-1, a 3-2-1 buy down, a 2-1 buy down, a 1-1 buy down, as far as you buying down your interest rate. And sometimes it might not make sense depending on the numbers, so you got to factor in the numbers, because you might pay, let's say, $10,000 to buy down your rate, but you only living in the house for a certain period of time, so you might not even get that money back as far as what you put in to buy down. So it has to make sense in regards to that too. So it says rates dip leading up to Fed announcement. So this is kind of talking about, because this was done before the Feds had their announcement. So this is just a little bit more in regards to the, like I said, even the home builder sentiment, where we're at in regards to all that. I wanted to show you something real quick before we get out of here, because I'm over my time. I always say that I'm going to go for an hour, and then I end up talking a little bit more. So, but I thought this was pretty interesting, like the affordability of home building state by state report cards. I don't know if you guys can see this. Let's go to so it says we assign grades to measure housing provision based on current affordability and current construction as a proxy for future affordability. With this approach, no state received an A plus, and only 1A and 2 A- final grades were given out, as all 50 states in DC have room for improvement. So they were given the states grades from like A to I think it was A to F. It says states in the South and the Midwest received all of the good grades, giving out A's and B's on the bias of affordability and home building. States in the West and Northeast, with generally stricter zoning and land use restrictions, received all of the bad grades, the D's and the F's. So I'm like, this is so hilarious. So I'm gonna show y'all what the different states that got A's, B's, and F's. Are buy downs cheaper with a FHA mortgages or conventional mortgages? It does. So a buy down, I don't know if it's cheaper per se of which financing you go with. I would definitely talk to a lender to see. But I think it kind of factors around a lot of different factors. So it might factor around the financing terms, it might factor around credit score, it might factor around any type of all those other things. So it's a lot of factors that might hit a possible when it comes to buying down your interest rate. But I would definitely talk to lender, because it might be a difference in regards to if you use FHA or conventional. So I might talk, but that's a good question. So let's see. So like they said, they're basing these letters on like zoning, land restrictions. So let's say like some of these states got a certain grade too, because it's harder for builders to build there because of the restrictions for zoning, and they can't build as quickly per se, and then affordability, and then different things. So I still say Georgia is becoming unaffordable compared to how much people make here. But I get beat down every day when I talk to lenders, even agents. They argue me down every day talking about it's affordable. I'm like, yes. I'm like, I guess probably because I'm not making 6 figures a year. I'm sorry, y'all. I'm like, I don't make 6 figures a year, so I'm not there yet. So it ain't affordable. I'm the average person. So these are the different scores. So right here, like in Georgia, they have it a B. It says affordability components 53, home building components 76, total score 64. So let's see where the A is at. So the A is in Texas. They said affordability components 55, home building components 88, total score 71. So again, the home building components consist of they have the new construction. So home building components is the new construction and stuff like that. So Iowa. So if you guys want to go to Iowa, supposedly affordability components 98%. Home building components 45%, total score 71.6%. So they're saying these 3 states are supposedly the best states to move to as far as affordability, home building going on there, and different things like that. So they're saying South Carolina, they're saying Iowa, and Texas. Supposedly South Carolina is the only state when they took their factors in that had an A. So this is highest place to kind of move right now, I guess. And then you got these two that are next. And then you got your B states, which is Arkansas. You got, I think this is Nebraska, South Dakota, Nebraska, where David's at. And then you got you got your B plus before your B. Indiana, North Carolina, Virginia is a B minus, Georgia, we're B minus. So these are the states in regards to that. And then you got your Western states as an F, or Oregon. California is an F, as far as, of course, affordability, different things like that. You have your F up here in New York. You have your F in Massachusetts, your F in Connecticut, your F in Rhode Island. Jersey is a C minus. And so you get these different factors per se. I don't know if they have the D. I don't know if there's a D right here. Montana has a D. They said affordability component 0. Dag. I'm like, I got to talk to an agent in Montana, because I'm like, dag, is it not affordable in Montana at all? Jaron said, if I knew it wasn't as bad or hard as I thought, I would have bought when I was younger. Yeah, I'm like, sometimes you don't know what you don't know. So it's okay. As like I said, it's all relative to where we're at in the world, where we're at in our life. So, and then Hawaii, of course, in the F. So, you live and you learn. I guess you live and you learn. So like I said, that's why I'm like, I don't want to convince nobody not to, to buy or to sell their house. We'll circle this back around one more time before we get off here. I don't want to tell you guys what to do or what not to do. Again, remember, when I do these lives and have this conversation with everybody, it's just to talk about what's currently happening, what's going on at a whole, but then you also got to zoom into what's happening locally to you. So always reach out to your own local professional, get the information. And if you feel like you have a conversation with them, but you're still uncertain, reach out to another local professional in the area, get a couple of opinions to see where things are kind of moving and outside of what you see, right? So again, my name is Clark the Realtor. This is our wonderful YouTube channel over here with the wonderful people that come live every Sunday to have a conversation. Lang, thank you for coming here tonight. Jared, thank you for coming here. My dad, thanks for coming. MH08, where you at? MH08, thanks for coming here tonight. David, where's David? David, thanks for coming. And if you guys haven't already, please go head over to David's channel. Living in Omaha, David Matney. He is live on Tuesday at 8 p.m. I will be in the chat. And MH08 is usually in the chat. My dad's usually in the chat. David has wonderful guests over there. So go subscribe to his channel. Don't forget to like and make sure you hit that notification bell on his channel. Thank you, Angela, for joining us tonight as well. And I think I got everybody that joined us tonight in the chat. Thank you, Corey West, as well. I know he was driving. Thanks for joining us in the chat tonight. I appreciate everybody for coming. Lang said there is a huge amount of green on that map. Yes, there's a lot of green. So they're saying from the greens is more of like the good scores and more the areas that's supposedly more affordable per se. So they're making it seem like there is a lot of affordability still happening out there. But I also say we gotta make sure whatever we're trying to buy, it fits into our budget too, right? So, but they're saying that South Carolina supposedly is the best state to go to right now. I gotta find a realtor over in South Carolina. I'm pretty sure we have a realtor partner through our brokerage that's over there. So I have to reach out and chat to a realtor in South Carolina and see what they're seeing over there. Lang said, thank you for everyone's participation and presence. Yes. Thank you guys. Have a wonderful night. Have a great Sunday. And if you need me, don't forget, you can email me. I'll put my email information below in the comments. If you have any questions, if you just want information per se. I do get a lot of emails based around some of the videos that I talked about as far as like landlord policy, the Zillow stuff that I talked about, everything. I just want to let people know I'm not a lawyer. And I appreciate people reaching out to me, to ask lawyer questions, but I'm not a lawyer. I'm a realtor. So what I can do is give you best information I know, but I'm always going to tell you to go and talk to someone legally per se. All right. MHOA say cooking dinner. All right. Bye, MHOA. Have a wonderful dinner. And I'll talk to you guys on the next Sunday. Next Sunday, we'll actually have our probate attorney back again. And we're going to talk more probate stuff, POAs, different things like that, wills and trusts. So if you guys had any questions that you didn't get to ask last time, write your questions down tonight, throughout the week. And please have them ready to go, because she loved coming on here chatting with you guys. And we're going to dive back into that. for anybody to get more information. So get those questions ready, and I'll see you guys next Sunday. All right. Bye-bye.